Tampa Bay apartment market continues to do what's been doing for the last few years, putting up solid but subpar fundamentals, following the national patterns but from a trailing position. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Tampa Bay update. In the recession, Tampa Bay got hit earlier than most markets, and it's taken longer to get things going again. Its economic recovery has trailed the national norms. Overall national employment is now back above pre-recession peaks, but in Tampa, we're still about 2 years from a full economic recovery in terms of total jobs, and the same is true when looking at apartment occupancy rates and at rent growth levels relative to the U.S. averages. We'll look at those numbers in a minute. Before we do, it's worth noting that Tampa Bay matches the national story more closely in one other important metric, that being apartment construction. For the first time in a decade, apartment construction tops 6,000 units, and it's been above that mark now for 6 straight quarters. On an inventory growth basis, that's an expansion rate north of 3%, which certainly isn't crazy, but is high by local standards, and it's also above the U.S. average. So far, Tampa Bay has benefited from the nationwide phenomenon of strong demand continuing to exceed growing supply levels. As a result, occupancy jumped 50 basis points year over year to 95.1%. That is a 7.5-year high. And you can see on the chart here that Tampa in red has consistently followed that national pattern of improving occupancy rates since bottoming out in 2009, and it's starting to close the gap some, but still has been consistently below that U.S. number. It's a similar story in looking at rent growth patterns. Tampa has generally been a trailer over the last 3.5 years relative to the U.S. average. As of Q3, new lease rent growth measured 2.9%. That's 80 basis points below the U.S. norm, but it is Tampa's best performance in nearly 3 years. And one of the more interesting trends in the Tampa Bay area is that we're now seeing a huge performance split in terms of rent growth between Hillsborough and Pinellas County. As of Q3, year-over-year rent growth for new leases measured 5% in Pinellas County, which is home to St. Petersburg, compared to just 2.1% growth in Hillsborough County, which is home to Tampa. Now looking ahead, we expect Tampa to continue to be a consistent underperformer relative to the U.S. averages. Job growth here has slowed down of late, and there aren't a lot of very strong long-term economic drivers in place. Even more concerning are local demographics. Tampa Bay's median age is close to 42, which is nearly 5 years above the U.S. average. Its demographics tend to lean towards single-family homes, and we've seen explosive growth in the single-family rental pool in the last few years, and that will likely make Tampa one of the few markets where the single-family rentals can be a significant factor relative to apartment performance. And that's going to wrap us up for Tampa. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.